Live from Tokyo, this is Insight with me, Sherian, where we dive deeper into the stories that matter with crucial context and analysis. Nissan and Mitsubishi shares surging while Honda is under pressure on news of a potential merger which could create a singular rival to Toyota and a big new player in the global EV race. We'll look at the potential winners and losers from a Japanese auto mega merger with Frost & Sullivan's Vivek Vaidya. Plus, Julius Baer's Mark Matthews joins us ahead of the final Fed and BOJ decisions of the year with his 2025 conviction calls. And Bank of America Chief Brian Moynihan tells us why he thinks the Fed may need to hit pause on its easing cycle next year. Take a look at how markets are trading right now. We are seeing a little bit of upside and recouping some of those earlier losses for Asian stocks despite the overnight losses on Wall Street. And this, of course, ahead of the big Fed and BOJ decisions. We had overnight U.S. retail sales increasing at a firm pace. We had here in Japan also November exports surprising to the upside as we really look ahead to the BOJ. Expected to hold rates and the Japanese yen right now holding at that 153 level. But of course, the big news today in the auto sector as well. We heard that we could be seeing that potential merger between Nissan and also Honda. And now local media TBS saying that they're expected to make an announcement on December 23rd. Right now, we're seeing Honda losses of more than 2% and Nissan seeing its best day on record since at least the 1970s. And this, of course, the close as Japan is on a lunch break right now. We also spoke earlier with Macquarie Capital's James Hong on the need for scale as motivation for this potential merger. Take a listen.
At the end of the day, for the Honda and Nissan, or even for the Mitsubishi management, we clearly understand that all the company understand the needs for the larger scale and more on the powertrain related technology transfer between these companies.
Let's get more with Bloomberg transport reporter Nicholas Takahashi. And Nick, this need for scale, it seems to be unanimous between all of these Japanese automakers. What do they individually have to gain?
Well, it's an interesting day for the Japanese automotive industry. What we're seeing is potentially sort of two camps starting to develop. If this merger materializes, we could see Honda, Nissan, and Mitsubishi. And on the other hand, we could see Toyota, Mazda, Subaru, and Suzuki. That would effectively split the Japanese car industry in two, as both sides try to scale production of hybrids and EVs in North America and China, respectively. A capital tie-up or the development of a holding company could help these car makers not just reduce costs for R&D, but, like I said, overlap production so that they can scale.
What is Honda's position right now in the broader global hybrid space, and how would this benefit Nissan? Of course, we know of their financial issues.
Right. Honda's been looking pretty good, actually, especially over the last year. Honda and Toyota have been selling hybrids in North America at a good pace. In contrast, Nissan, as a lot of people know by now, are having a lot of financial troubles. Their profits were cratering during the last quarter. So much that it forced them to cut 9,000 jobs, slash production capacity, and revise their annual fiscal profit outlook downward by 70%. So North America and hybrids are looking pretty good for Honda. And that's why Nissan has a lot to gain from this potential partnership.
How difficult is the global environment right now for these automakers? I mean, are these idiosyncratic issues for Japanese car makers, or is just a broader environment difficult? I mean, we've been talking about potential global tariffs extensively right now.
Yeah, it's a complicated situation, and I think there's two ways to answer that question. For Japanese car makers, North America is looking pretty good with hybrids because they've been selling so well in North America. On the other hand, in China, the advent of EVs with sophisticated software has left a lot of legacy car makers like Toyota, like Honda, Nissan, Mitsubishi, and others in the dust as local competitors like BYD take over. So in that sense, this partnership could consolidate those resources to sort of form a more solid front in both markets.
Nick Takahashi, Bloomberg's transport reporter here with the latest. Thank you so much for that. Let's actually get more on the implications of this potential mega merger. Frost & Sullivan associate partner Vivek Vaidya joins us now in Singapore. Vivek, so how much this tie-up would make sense for these automakers, and why haven't they done it sooner, I guess, is the question. The timing also seems interesting.
Yeah, I think timing is obviously triggered by the financial woes of Nissan, but together this entity is a complete automaker, because if you see Honda has a hybrid as well as hydrogen, whereas they are a bit weaker on battery electric vehicle, whereas Nissan is strong in battery electric vehicle. So together they have, I would say, plugged all the loopholes into their entire product range.
You say timing given Nissan's financial problems, but what does Honda specifically have to gain from here? Is it just a matter of scale?
No, I think Honda gains access to electric vehicle technology, the entire value chain for batteries. All this is like a jump start as far as Honda is concerned. Otherwise, they will have to do it themselves, because battery electric vehicle, although they are not going to completely wipe out IC engines, but they are definitely going to be a segment of interest, especially in China, especially in Europe. And as a result, Honda also needs a strong battery electric vehicles into their portfolio. So as I see it, both players stand to gain from this merger, a completely complementary merger, and the combined entity will be a complete automaker in my view.
When it comes to the dominance here in Japan, of course, we have Toyota and Toyota-related companies. How well could they compete? Yeah,
I would say the competition is not just in Japan. The competition is out there in the global world, especially, I would say 4 markets. Japan, of course, is one, but US, China, and Europe. These 3 markets are the markets where most of the OEMs call their playfield. And both these, Toyota and its allies and Honda and its allies will have to compete in those markets, because that is where the profits come from, that is where the volumes come from. So that is the playfield where they would need to compete with Toyota, but not just Toyota. There are other players there, and that is something that they will have to watch out for.
We've been talking about Chinese EV makers, right? How formidable are they in this global competition right now?
Chinese EV is formidable in pockets. So, for example, if you go to China, they are very formidable. But Europe, also they are very formidable, but now they are facing tariff barriers. As far as US is concerned, the evolution of EVs is a bit more natural. It's a bit more not forced by the government. And as a result, the challenge that EVs from China pose there is very limited. So it's bits and pockets, but on the whole, players like BYD are extremely formidable, and nobody can really ignore them.
You mentioned the potential for tariffs and these hurdles for these EV makers, especially from China. How big would the hurdle be also within the United States market if we see President Trump really wanting these car makers to produce and manufacture inside the country?
Yeah, I mean, that is a fallout of tariffs. So if tariffs are high, then the Chinese OEMs will have no other option but to start producing in the host of countries. Now, same thing is likely to happen to Europe if the tariffs go to, say, triple digits. But at double-digit tariffs, I don't think it's going to make that swing from producing in China versus producing in Europe. They might come to something like a Southeast Asia. But as far as US is concerned, it is not just a question of production, but as far as the legal risk is concerned, in case the vehicle meets with an accident, in case there is a fire, the kind of legal risk that these companies are likely to face is very high. So it's not just tariff barrier, but legal risk is also a big barrier as far as Chinese vehicles in US is concerned.
And Vivek, at this point, we don't have many details of what this partnership could look like, especially since we're still awaiting an announcement, which local media are now saying could happen on December 23rd. If it were up to you, what sort of configuration would make the most sense?
So we can only go by history, what has happened between, say, Nissan and Mitsubishi. So they don't really do a merger at a brand level. So both brands will stand on its own, because all automotive brands have a very strong fan following or have a very strong brand loyalty. So as far as I'm concerned, there are 2-3 things which will make sense when they combine. Number one, they will combine the supply chain. They will make sure that each of the supplier gets a higher volume, and therefore they have economies of scale. Number two, production plants. Number three, and that I would see is at biggest, is de-risking the innovation. Right now, we don't know whether IC engines and EV, how they will pan out, how they will basically be competing against each other. We have a lot of uncertainties about battery chemistry technology. So all of these uncertainties require much bigger appetite as far as invested capital, by talent, by market. So one of the biggest benefits to both entities combined is de-risking the innovation in these uncertain times. And that is what they are.
So why are we hearing? And why are we hearing about a potential expansion to Mitsubishi as well? How would that make sense?
No, Mitsubishi is already part of Nissan. When Mitsubishi was in financial trouble, Nissan was the one who basically formed an alliance. So Nissan and Mitsubishi already are group companies, and therefore Honda joining them is actually 3 OEMs coming together and not 2.
When it comes to the supply chains that you talked about, we have seen auto parts maker gain a lot right now on this potential merger. How would that affect some of those suppliers broadly, not only in Japan, but perhaps around the world as well?
When supply chains get combined, what happens is the volumes go up. There might be some components which are very similar being manufactured by multiple players. Now they will get combined, and the overall volume will go up. But the consolidation will also mean that some of these auto component suppliers will have to find some other business. Some volumes will go up, and some of them who are not competent enough in terms of cost, in terms of quality, in terms of delivery time may also go out of business. So the overall impact of consolidation is building of efficiencies, but it also means making some companies redundant.
Yeah, which could also lead to the question of, would there be anybody that could potentially oppose this deal?
Yeah, I mean, yes, of course, there would be there would be some interest group who would lose out from here and they will oppose. But from what I see, there is a global wave of consolidation. Most of the legacy auto OEMs are facing financial trouble, and if they are able to find a like-minded partner, if they are able to find a partner who kind of makes sense, then that's a much better option than trying to wait it out and either dwindle down or get into hands of someone whom you don't have a good chemistry with. So I would say the first best option is to have someone who's like-minded, who's probably going to take care of your brand, who's going to take care of all the legacy that you have and help you to grow, rather than wait it out and see for some miracle to happen.
I mean, how difficult is it to find those like-minded partners? We have seen these global partnerships also being downsized, and we have heard about the problems between Nissan and Renault. How difficult is it to go through a right decision-making path when you have so many players involved?
If you talk about, say, Japanese automakers, it's very difficult, because one of the reasons why Nissan and Renault had difficulty getting along is they were from 2 different worlds. Because Japanese automakers, be it Honda, be it Toyota, have a typical way of working. They demand a certain quality of output from their followers. The processes are same. The auto component makers have to follow a certain process. So all that is pretty standardized, and it would be very hard for them to work with someone who comes from a completely different culture, which might be outspoken, the processes might be different, and therefore how difficult it is, it's very difficult. So if we have found someone who has come from a same background and is able to understand and appreciate the differences and similarities between your brand and their brand, that's a best case scenario.
And the processes are really difficult with government bureaucracy here in Japan as well, right? One of the reasons why we saw some of the issues when it came to some evaluations of components and just like really keeping up with what authorities wanted to see in terms of safety standards here among Japanese companies. Do you think authorities will be okay with such a tie-up, given that really it could end up with two big camps, Honda, Nissan, Mitsubishi, and on the other side just Toyota?
Yeah. So although we don't follow like antitrust or those kind of situations, but going by past, I think governments would always be happier if many Japanese companies work together, become stronger, become more globally competitive. So I don't know the legalities, but I can say for sure that in principle, most of the Japanese governments will like this move.
So what happens to the global partners, Renault, General Motors?
Global partners of which company?
Of Nissan and Honda, for example. We know that they have been downsized already, but they still have partnerships around the world, right?
Yeah, so most of these partnerships are specific to a model, specific to an engine, specific to a technologies. Those would stay. I don't think these partnerships are going to break, or these partnerships are going to give way. So most of the times what we have seen is when these kind of mergers happen, they try to protect what they already have and try to build on the inefficiencies and deficiencies in each other's company. So I don't think there would be any disruption as far as external world or external partnerships are concerned.
Do you expect a move from Toyota to do something to try to compete better as well if this merger were to go through with its competitors?
Unlikely. Toyota has already played their cards. I think they are already working with several smaller OEMs like Suzuki, Subaru, Daihatsu, etc. So they have already made their move and they are already onto their plan. So it is unlikely that we will see any retaliatory move from Toyota or any other OEM.
Of course, we have seen the stock divergence to the potential merger. We have seen Honda seeing its worst day in, 3 weeks or so, while Nissan is seeing its best day on record. Where do you expect stocks to head if we actually do see this consolidation happen?
Again, the stock prices is not exactly my forte, but as I see it, the financially distressed partner stands to gain more, and therefore the current stock movement is reflective of that.
Vivek, Vaidya, really good to have your insights. I really appreciate your time today. Associate partner of Frost & Sullivan here with his views on this auto sector here in Japan that could see some big moves in the coming months. Coming up, memory chip maker Kioxia makes gains in its debut on the Tokyo Stock Exchange. We'll look at whether this indicates growing investor appetite for new listings in Japan. This is Bloomberg. Here's a look at the listing ceremony for Japanese memory chip maker Kioxia. In the last hour, shares rose in its trading debut, bouncing back after an initial wobble. For more on the listing and what's next, let's bring in our Japan stocks reporter Alice French. Alice, there was a little bit of concern going into this debut that it could get a cool demand given Kioxia's performance so far. But what do you make of what's happened early in the trading session?
Yeah, I mean, look, I was on here this morning before market open talking about how demand was lukewarm, like you say, and how investors had concerns about Kioxia because of this kind of depression in the price of the NAND chips that they make. But we've seen the price actually rise as much as 6% above the IPO price this morning, which is pretty good. So it was originally priced around 1,400 yen. We've seen it rise at times to closer to 1,600 yen this morning, which I think has been a pleasant surprise for a lot of investors. And this is likely on the positive outlook for how demand will rise for these chips as the AI boom continues. So the NAND chips that Kioxia makes, they're not as vital for AI, for example, the things that the AI products that NVIDIA makes as other DRAM chips, right?
Yeah, because the concern was that they weren't diversified enough, right? Especially to DRAM, for example, and like the likes of Samsung, SK Hynix, or Micron. But what are they saying now, and what's the optimism about then?
Yeah, well, this is the thing. I mean, there's very high competition in this field, and there were concerns about how Kioxia would be able to deal with that. But this seems to be an optimism of data center growth, right? So that's obviously another big piece of the puzzle when it comes to AI. And the chips that Kioxia makes are key for data centers, and there is pretty good outlook for those in 2025. And so the assumption is that, even if Kioxia's earnings might be pressured in the short term, we will see long-term growth from the data center side, which I suppose is a sign of what the chip industry is looking like sort of more broadly for next year as well.
How much is it about just optimism and enthusiasm about the Japanese IPO market as well?
Well, exactly. I mean, 2024 has been a pretty big year for IPOs in Japan. We've seen them raise in total almost 1 trillion yen, which is the most since 2018. So it's really back at those pre-COVID levels. But interestingly, the actual number of companies that have been debuting is quite low. It's about a 10-year low. So I guess the IPO outlook is sort of moderate for Japan right now. We've seen really big names like Tokyo Metro, for example, debuting a couple of months ago to huge demand and a lot of excitement. Kioxia was perhaps, like you say, a little bit cooler, but actually it's done pretty well today. So that does bode well for 2025. We've got some other big names coming up in 2025 in the crypto sector and in the chip sector too. So this may be exciting investors in that sense.
Although when it comes to the chip sector, I got to wonder what happens to the Trump variable, right, and the potential tariffs.
Well, absolutely. I mean, not just for Japan, but the world over, there are concerns about that, particularly with companies that have high China exposure. In Japan, we're looking at things like Tokyo Electron, Screen Holdings too. And we have seen movement within Japan's market since Trump won the election last month towards away from those kind of hardware plays and more towards software. So, for example, gaming stocks have been doing pretty well as investors kind of try to shield themselves from those external risks. But yeah, we are definitely seeing investors in Japan looking more inward as these geopolitical and trade risks beckon in 2025. But at the same time, the AI boom is continuing. There's no doubt about that. And so I don't think we'll see a complete kind of reduction of interest in the sector in 2025.
Alice French, Japan stocks reporter here with Kioxia's trading debut. Great to hear from you as we're, of course, also headed towards a BOJ policy decision, which, of course, is another uncertainty for the Japanese markets. Take a look at how the yen is trading right now under pressure against the U.S. dollar at the moment and really treading water under that 154 level, 153 right now. The expectation is for no change at this meeting. Traders pricing in less than 20% a chance of a rate hike this week. But of course, we also have the other side of the yen, which is the U.S. dollar, and we have the Fed expected to cut. So we'll continue to watch the volatility in the currency space. The Fed cut tomorrow is all but priced in, so investors focused on the updated projections for 2025. Julius Baer's Mark Matthews gives us his take next. This is Bloomberg. Welcome back. You're watching Insight. Our top story today, Honda and Nissan exploring a potential merger. A deal would effectively consolidate the country's auto industry into two camps. And Bloomberg's Avril Hong has been watching this. And Avril, Japanese market's about to come back from lunch, and we had some divergent pictures with Honda under pressure and Nissan seeing its best day ever. What can we expect in the broader transport sector?
Yeah, I mean, as you say, dividing the auto industry in Japan into kind of two camps, right? Toyota on one side, and then Mitsubishi, Honda, as well as Nissan, kind of the smaller players. Overall, it looks like a potential deal that could help them better compete against their much larger rival that has been faring a lot better. And overall as well, if you take a look at what this could mean for consolidation of the auto industry, make it better to compete with the likes of Chinese automakers. Of course, that's been a market that has been losing market share against, and also it's been lagging versus the EV drive. So the sense you get by most participants in the market is that that could help it close the gap, potentially with the broader topics. And of course, this is a fair bit of underperformance that we've been seeing, also emerging potentially as a theme versus gaming stocks, which overall have been outperforming chip stocks since Trump's win. As we're back from the lunch break, let's take a closer look at how these auto stocks in Japan have been faring. Nissan has been going gangbusters today, as you alluded to a short while ago. It popped 24%. That's the daily limit. For Honda, that underperformance today really comes because analysts have been flagging that the benefits for it seem pretty limited. For Nissan, that seems to be the main beneficiary given the scale of operations, cost competitiveness, and of course, there's that sense that Mitsubishi could also be part of that transaction. This is what we're seeing as we're coming back from the lunch break, Sherry.
And Avril, with all of the corporate headlines, let's not forget that there is still a Bank of Japan decision coming up, right? I mean, we have seen some mixed messaging coming from the BOJ in the last few weeks, but do we have any more certainty right now about what they're expected to do this week?
Yeah, they're not expected to do anything tomorrow, but in terms of messaging, what we've been hearing of late is how this is a central bank that's in no rush to hike. But given how this has affected the yen, what we might see is some verbal pushback from the central bank chief, Kazuo Ueda. It's really interesting. This month alone, we've seen the market's pricing for a BOJ move tomorrow go from about 2/3 to roughly 15%. And then there's now no clarity even about whether we might even see a January hike. So amid all this uncertainty, what we've really been seeing popping is the implied volatility. It's, of course, not just about the BOJ. It's also Fed-related tomorrow. And based on this, the suggested trading range tomorrow could be somewhere between 152.2 to 154.7. So quite a fair bit of uncertainty in the markets. And this is coming on a day today where we actually got Japan exports numbers. Of course, this is something we're keeping close watch on, as that cheap yen does tend to help these exporters. It inflates the value of their earnings. If you can flip the board and take a look at this next page, I'll just show you really quickly how exports rose. And this is interesting because we did see actually the shipments on autos. That was the drag. So keep that in mind as we keep an eye on the BOJ and the Fed tomorrow, Sherry.
Avril, thanks for that. And yeah, you mentioned the Fed. Let's not forget there's a Fed decision also coming up, and this would be ahead of the BOJ. And now a hawkish cut is widely expected. The updated forecast for next year will be keenly watched. Joining us from Singapore's Mark Matthews, Head of Asia Research at Julius Baer. Mark, always great to have you with us. I mean, how cautious are we expecting the Fed to be, despite the fact that this cut seems to be pretty much priced in at this point?
I'm sorry, I don't hear you very well. But if you're asking about the Federal
Mark,
Reserve,
the Fed,
are you asking about the Federal Reserve? Yes, you are. Okay. We're looking for 25 basis points and a hawkish cut. In other words, we think that with the unemployment rate at about 4.3% and the inflation rate between 2 to 3%, there is a case for a slightly lower Fed funds rate, but not dramatically lower. So we think they'll be also revising their economic forecasts and projection for the Fed funds rate to less dovish forecasts than they had back in September. I guess what's different between us and the broader market is that we do expect one more cut in January. The market is not looking for a cut in January, but after that, we don't think there'll be any more cuts for the foreseeable future. And the reason for that is we think this incoming administration won't be able to do everything it says it it wants to do, but it will be able to do a lot, and that'll be enough to accelerate the overall GDP growth rate of the United States, we think, to about 3.5% next year, and possibly about 2.9 or 3% in 2026. And so that's not really an environment that deserves a big bunch of interest rate cuts. And so just to reiterate, 25 basis points tomorrow, another 25 in January. And thereafter, we'll have to see what unfolds.
We don't have Mark Matthews at the moment, but we'll try to reestablish that connection. And of course, we continue to watch the markets right now. Asian stocks holding steady, and we will be talking about the BOJ also coming up. This is Bloomberg. Welcome back. Let's head back to Mark Matthews, Head of Asia Research at Julius Baer. Mark, great to have you with us, and hopefully you can hear me this time. But I was just asking you about the solid economic data that we continue to get from the Fed. So why are you expecting a cut this time and also in January?
Well, Sherry, I'm expecting it because they don't like to surprise the market, and the market is 100% pricing in a 25 basis point cut tomorrow. So purely on the basis of that, I can't remember the last time that they made a change to interest rates when the futures market was so certain, that it was going to do a certain thing. And so I believe the data is at a certain level where they can have a lower Fed funds rate. But if we are going to get an acceleration in GDP growth, as I said, to 3.5% next year, that's probably going to imply somewhat of an inflationary, response. And the balance of that means that we could see, we believe, 25 in tomorrow and then 25 in January, but no big reason to cut rates a lot after that.
I have to talk to you about surprising the markets. Is it a whole different playbook right now for the Bank of Japan, at least? We've been trying to figure out that communication strategy, the difference between Governor Ueda and the past with Governor Haruhiko Kuroda as well. No change expected tomorrow. Could they surprise?
They could. They're a little less predictable than the Federal Reserve. We saw that in August, of course. But I would just say I don't see a reason why they will surprise because the inflation rate there is very tame. If memory serves me right, it's 2.3%. Their economy is very slow. It's 0.5%. So they don't need to be ratcheting up interest rates. And so we think that they'll pause this month, and we do look for one 25 basis point hike in January. But thereafter, we think they're done. And so their policy rate, the terminal rate, will only be at 0.5%, which will be, of course, very low compared to the other central banks of the world.
Which means more pressure for the Japanese yen, but could they be getting some help from the Fed if you're telling me that perhaps we could see easing in the next two meetings?
I think on balance, the yen will weaken because, as I said, let's say by the end of January, the Japanese policy rate's at 0.5%, and we think the Fed funds rate will be at 4.25%. And then we're looking for, let me think, the Bank of England to be about 4.75%, and the ECB to be, I guess, about 2.5%. Well, all of those are way above the Bank of Japan at 0.5%. And when we look back historically, what we see as the primary determinant in the dollar yen is the differential between the interest rates of the two economies. And so we're looking for the yen to go to 160 by this time next year.
At what point does it become 160? But at what point does it get too painful for the Bank of Japan and too painful for the Japanese households? I mean, last time when they moved in July, we really did see that pressure coming from different politicians voicing their concerns about the weakness of the currency.
Well, inflation was an issue last summer when I think it was up around 4 or 5%. But as I said, it's come down a long way now. And I don't think it's having it's causing the same problems for the Japanese household as it was back then. So I think they'd be perfectly happy with the yen at about 160. And of course, as an export economy, it is still a big export economy. And it's a big export stock market, too, by the way. I think 40% of Nikkei revenues are from overseas. The weak yen makes them a lot more competitive. And so, I don't see why they wouldn't let it go there.
Yeah, I mean, we saw those November export numbers already surprising to the upside this morning. Who would be the biggest gainers, even among exporters? We are seeing a lot of activity in the Japanese markets. Of course, today the big news was a potential merger between Honda and Nissan.
The car companies are still big exporters. They have problems, though, like the car companies in Germany. They really can't offer competitive EV products relative to the Japanese. The Chinese. So they're losing share in China, and of course, China's now starting to send a lot of very good EVs around the world, particularly to the emerging markets. And then Trump saying he wants cars built in America. Well, the Japanese plants are largely in Mexico, excluding Toyota, and the Europeans have much stricter emissions. So I wouldn't be swooping in to buy any Japanese car companies. But overall, I mean, there's lots and lots of Japanese exporters, electronics, consumer. And the thing in Japan that I think is special relative to the rest of Asia is they have really good global brand names. I can't think of many outside of Japan in Asia. There's a few. There's Hyundai in Korea, Samsung in Korea, but I think the list kind of stops there. And so in Japan, you can put together a basket of quality exporters with returns on equity in the kind of teens or even 20s. And with a yen in, sort of, as I said, heading back to 160, I would be very happy owning a basket of those kind of companies.
How would you compare the Japanese market versus the U.S. market? I mean, it's always relative, right? When you're trying to put your money into which market you put them. We have seen this U.S. dominance and this narrative of U.S. supremacy when it comes to the stock gains, the Magnificent Seven. Going into 2025, could that continue?
Yeah. Well, if I look at the top 25 companies in the world by market capitalization, they're almost all listed in the United States, and they're almost all technology companies. In fact, I don't think even one is listed in Japan. And so the technology companies, as we know with the internet, have managed to scale into so many other industries and so many other geographies around the world. Over half of all the people in Indonesia use YouTube regularly, for example. I can't think of any company in Indonesia where over half of the population is using it. So you can extrapolate that, of course, to the whole world. And now we've got artificial intelligence coming, where it's very clear that the Americans are far ahead of the others. And even, the good startups in other parts of the world, when they want to list, they'll come to the United States. We're going to see that with Klarna, the big Swedish fintech. They're going to list in the U.S., not in Europe. So that's the reason why. And the other thing in Japan is that the biggest sectors are banks and industrials, and they have just inherently low returns on equity. So the overall return on equity for the topics is only about 8 or 9%, and for the S&P, it's in the 20s.
What about in order to really propel that AI demand? You need the hardware companies, the chips. We have some of them here in Japan. We have some of them in Korea and Taiwan as well. Will that narrative continue into 2025, or will the AI competition sort of change narratives? I've heard some analysts saying it will be a software story more than a hardware story, so these Northeast Asian economies might not benefit as much.
Well, of course, Taiwan Semi make the GPUs for NVIDIA, so that's an obvious one. But I don't think you'll find much in Korea. It's mostly a memory kind of market where there's massive overcapacity. And smartphones now, I mentioned the Chinese earlier with electric vehicles, but they're coming up with such great smartphones. So I wouldn't necessarily go out of my way to own a smartphone manufacturer. I think broadly, it's hard to say with AI. All I can say is the adoption rate is kind of where the internet was back in 1996. If you can imagine, Netscape Navigator was launched in 1994. 2 years later, the adoption rate of the internet was about 15% in the United States. 15% of the population were using the internet. And that's where we are today with generative AI. If you look at ChatGPT or Gemini or the other big ones, it's about 15% of people who are using them. And so I think, just broadly, we've got a long way to go with artificial intelligence, and that'll make itself felt in many different sectors, not just in technology.
You're taking me back to Netscape now. I'm starting to feel old, but let's talk a little bit about the geopolitics of things, because, of course, this sector, when we talk about AI, tech is always going to be confounded with the geopolitical tensions between Beijing and Washington, right? When we talk about this potential for more tariffs, who are the winners and losers in this scenario in 2025? And will China's tech companies be able to overcome that? Is there any sector in China that could offer still opportunities given the broader slowdown in demand there?
Yeah. Tencent are making huge strides in generative AI, but as you know, it's a closed ecosystem. I think the Chinese internet companies look very interesting. A lot of people don't realize that, including the dividend, the Hang Seng Index has returned over 20% this year. I mean, I think that makes it a bull market, doesn't it? So China's been creeping up, and broadly with the geopolitics and the tariffs, what I would say is that they won't do as much as they're talking about, because that would require congressional approval. And if memory serves me right, intermediate goods and capital goods are upwards of 40% of all imports to the United States. In other words, they take those things and they use those things to make other things. So it would be U.S. manufacturers getting hurt by very, very high tariffs. So, yeah, I think that they can go up. I think generally the tariffs now on imports into the United States are about 3 or 4%. Maybe that can get to 7 or 8%. But when you look at exports to the United States as a percent of China's GDP, they're only 3%. Back in the 2000s, they were 10% or probably more. So I don't think increasing tariffs in China a little bit is going to hurt their economy that much.
And so you do see still pockets of opportunity. What are you seeing in the real estate sector? Do you follow the property markets closely? And do you expect some of these policies that we've seen in the past couple of weeks from the different Politburo gatherings, the Central Economic Work Conference, not to mention the upcoming National People's Congress in March, to make a difference?
Well, first thing I'd say is that there does seem to be some stabilization in property prices in the Tier 1 cities, which are Beijing, Shanghai, Shenzhen, and Guangzhou. In fact, I believe the month-on-month data just came out 2 days ago and showed that it was positive. So there seems to be a recovery going on in prices in the Tier 1 cities, both in terms of prices and volumes. But the old adage for property is location, location, location. And so it's a big country with many cities, and there's still a lot of oversupply in the Tier 3 cities. And that'll just take time to work its way through. But yes, I believe the policy will become more stimulative, both fiscal and monetary. And at the margin, that will be helpful to their economy. I mean, for the economy to really make a big U-turn, I think they'd have to basically go back to leaving the private sector alone, like they did before 2020. And I'm not anticipating that. But more fiscal and monetary stimulus will be helpful. And anyway, I believe the mean reversion in Chinese valuations, which started back in the summer, will continue. I can still screen and find literally dozens of companies in China where the price-earnings ratio is numerically lower than the dividend yield, which is a classic sign of a distressed valuation. Usually, as you know, the PE ratio should be above the dividend yield, but I find lots of companies in China banks and industrials mostly, where the PE ratio is, say, 3 to 5 times, but the dividend yield is, let's call it 7 to 10%. So I think it's a perfectly good place to put some money with a big dividend cushion, looking forward to more policy support next year.
Do you expect any of the Southeast Asian economies and markets that have benefited from that supply chain rerouting because of the Beijing-Washington tensions to continue to gain ground into 2025?
Yeah, Vietnam's the big one. It's very hard to access that market because they still have foreign ownership restrictions. So you almost always have to go through funds as opposed to buying single stocks. And I think Vietnam is fine. I think it is fine as a sort of whatever you want to call that China plus one diversification story. But it's a roller coaster of a market. I mean, it has the kind of volatility that Bitcoin does. So if you're going to buy it, just put it away and don't look at it for a few years, because you won't sleep well at night if you do.
I don't know. They're calling crypto now a safe haven these days. Mark Matthews, thank you so much for joining us. As always, great to have your insights. Head of Asia Research at Julius Baer. And we're talking about Southeast Asia. Well, we have two big central bank decisions coming up as well from Indonesia and Thailand later today. Most economists we've surveyed expect both will keep rates steady. Indonesia will be razor focused on supporting the weakening rupiah, which went past 16,000 per dollar last week, triggering an intervention. Meanwhile, the Bank of Thailand expected to stick to its key rate at 2.25% to bolster growth, despite government pressure for a rate cut. And here are some of the other stories that we're following right now. Japan pledging to continue supporting Rapidus, even if the company delays its goal of mass producing advanced logic chips by 2027. Speaking exclusively with Bloomberg, the chairman of the ruling party's group for semiconductors told us Rapidus is a core part of their strategy. The LDP government is planning to provide 10 trillion yen in public support for the semiconductor and the AI sectors by 2030.
そんなケチな話じゃないです。ね、私たちは
We've carried out our semiconductor strategy with determination, and the Rapidus project is a core part of that strategy. From the start, we never anticipated this project to be smooth sailing and with no obstacles. Only after we overcome all the hurdles, we can envision Japan's future. If the target changes to 2028 or 2027, that won't matter to us. We will keep going.
Now, the U.S. is set to be gearing up to initiate a trade investigation into Chinese semiconductors in the coming days. Sources say the review could result in tariffs or other measures to restrict imports on older model chips and the products containing them, such as cars and smartphones. The investigation could take months to conclude, with any reaction left to Donald Trump's incoming administration. That's it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.